Greetings, ladies and gentlemen. This is Houston Trung from thetradingedge.org, and here is your weekly market outlook for October the 28th to November the 1st, 2019. So, can you believe it? Already the final trading week of the month, and we've got Halloween this week. So, into this coming week, we got a lot of news items that can potentially move the markets, both econ news and earnings news. Earnings reports. So let's kick things off with that. So first off, on the econ calendar, Wednesday is the big day to watch. You got that GDP number at 8:30 in the morning, and then you got the FOMC announcement as well as a press conference at 2 and 2:30 respectively. Thursday you have the jobless claims number, which we will be watching, as well as that employment situation number on Friday morning. And don't forget that we have the ISM number on Friday, the first Friday of the month. And remember what happened last time we had that ISM number, the markets kind of fell apart a bit. So I don't think people are expecting it again this time around, because things are a little bit different in terms of the situation now. But certainly one to pay attention to, and to just be mindful of in case you have a bunch of open positions out there. Be careful as you take new trades, or you have trades already in the book as you enter into those reports. As I mentioned already, lots of earnings reports coming this week, so a very, very busy earnings week. And we have a lot of FANG names reporting this week, so that's going to be a market mover. Google kicks things off on Monday, I believe, before the bells. Let's take a look. Yeah, before the bell, we're going to get the Google report, the Google earnings. Then on Tuesday, we got AMD, Shop, FireEye, some of the bigger names there. Wednesday, we have Facebook and Apple reporting after the bell. And of course, you already know about that FOMC event happening at 2 o'clock. Thursday, United Steel, Celgene, some big names there. And on Friday, we got Baba, Exxon. So lots of stuff going on the calendar this week. So definitely pay attention to those headlines and earnings risks. So this week was a wild week. Wild in the sense that I think a lot of traders still have some sort of negative bias on the market. And I've been trying to, if you listen to the videos for any amount of time now, you know that I've been trying to talk traders out of that negative bias, because we only have, after this week, we only have 2 trading months left in the year, and I don't think we're going to turn this year negative, red for that matter. So if you look at all the pullbacks that have happened this year, they have all been buyable, and there should be no different going to the end of the year. Now, that's why I always say I let price lead. We're responsive to price, so ultimately we respond to what price does. But we also want to have a high enough. We want to also have a long enough perspective where we don't get bogged down or lose our focus on the bigger forest through the trees. So let's get into the charts now and talk about the week that was and what we can expect coming up. And this chart really tells the whole picture. For the past few weeks, I've been telling you guys that the VIX is not showing any fear, right? So just to take a step back here, let's go to 3-month chart. Be very, very clear. This is a quarterly chart. Okay, so here, last quarter of 2018 was this big red one. That's when everyone got shaken out and people got really, really worried going into 2019. There, it went outside, inside on the quarter, and then that's Q1, here, Q2, it went outside, inside, and down. Now, granted, there were some bumps along the way, but this longer term perspective chart shows you that the VIX is actually, it's going right in the lows now. It's, at the lows of the year, not all-time lows, because this thing is designed to go to 0, but the VXX is designed to go to 0. But this is trading as if the traders are not buying into the headlines. So if you watch just CNBC and BNN or whatever the news outlets like to watch, it's very easy to get scared from all the headlines. The tariffs, the recession that could be possibly coming down the pipeline. You have close to the slowing global growth story. You got Brexit. All these things seem cataclysmic. But if you look at the charts, the VIX especially, it's just not showing you that. This thing's going, it's at the lows of the year so far, and we only have 2 months left in the year. Okay, so on to the monthly chart now. Monthly chart, big red month, down 16% month to date. Excuse me. Weekly chart, another red week for the VIX. So we've had 1, 2, 3, 4 consecutive red weeks in a row now, and all off of this trend line break, right? So we had this trend line here, it popped below, popped back up, and now it broke below again. It held as resistance. That was one support, resistance, and now it's coming back into these yearly lows. Okay, so continue to watch for that or not. Okay, now in the short time frame chart, I'm just going to show you one chart here because kind of all the indices kind of look like this, but the VIX has basically been selling off now for a while, like you see in the past 4 weeks. Inside, this is a 2-day chart, so inside bar and down, down, down. Here this week, it popped up a little bit in these 2 days here at the beginning of the week, but then it went outside bar. So anyone who tried to buy this, right, like, okay, maybe this is bottomed. I like this shooting star kind of pattern, or excuse me, I like this bullish hammer, right? So I'm going to try to buy that. They bought it, they made a little bit of money here, but then it came right back through the range again. So it did an outside bar, meaning if you bought here, it took you out the other side because this low is lower than that low. Okay, and now they're really pressing them because now it's outside bar and down, and it's momentum. The only issue with momentum is that it has to keep going, right? So if this thing pops up, you can pop back up here. It's possible that it pops back up here again and comes out through the other side to take out that pivot high. So long as this pattern continues, outside bar down, you want to see it continue to go outside bar down, down, down. If it makes a higher high, meaning it takes out previous high, as you know that I've been talking about, we talk about these outside bars and what they actually mean and signify, then you need to watch out because then it's possible it comes back up to the range again. Just like this situation here, when it goes outside bar up, it looks like it's got momentum, but as soon as that low gets taken out, bye-bye. Momentum has been extinguished and it's going back to the downside. So this coming week, continue to track how the highs of these bars, whether or not they get taken out or not. If not, your bias continues to be to the downside. Okay, so SPY, bigger time frame first, quarterly chart, still a inside quarter, right? So we're only 1 month into the quarter. It's still inside quarter, a little bit different from the VIX. I just wanted to show that because the VIX, obviously, it's broken this quarterly chart to the downside, or the previous low to the downside. The SPY, on the other hand, is still slightly inside quarter, inside bar. So on the monthly chart, we're really close to those all-time highs. So we'll talk about the Qs in just a few moments, but based upon Friday's, oops, excuse me, wrong one there. Based upon Friday's close, we are very close to those all-time highs. We're less than 0.34% away from those all-time highs. So $1.04 away from hitting all-time highs. So we're really, really close to taking that out now. Okay, weekly chart, nice green week, right? So we gapped up and held the gap. And on the 2-day chart, this is the story, just like in the VIX. So here, we want to be mindful here because it's doing the exact same thing on the VIX, on the SPY 2-day chart. So it went outside bar and up. So now it's going momentum. There's your all-time high right there, 302.63. We closed at 301.59. So again, very, very close to those all-time highs. It's a momentum up condition now. So if the SPY pops up here, maybe it makes all-time highs. If it comes back in and takes out that low, that means we ran out of buyers. Simple as that. We ran out of buyers, and you can expect things to come back into the range again. But we are trading with full time frame alignment to the upside. So here, that orange line is your monthly and quarterly open. So right now, the SPY has been respecting that level. Okay, so since the halfway mid-month, it broke back above that monthly quarterly open, and it's held it since then, and it's been respecting it. It has not had to defend it. So if it does pull back, you want to see, does it continue to hold that level or not? Okay. Now on the daily chart, this is the story that we saw here. So if you recall, well, I'll talk about the shorter time frame chart in a few moments. But this is what you basically saw here. So here's your Monday open. It gaps up, right? The question was, are they going to hold the gap or are they going to fade it? So like what happened last week, remember on Thursday? Not this past Thursday, but the previous Thursday. It had gapped up. It actually went inside bar up. But the next day, they actually faded it. And it went inside bar reversal to take everyone out here, right? So that pivot here is lower than that pivot, and I believe, was that lower than this one? 296.97, 296.99. Yeah, right. So it did not quite make a lower low, but it came really close. But they defended this quarterly, monthly open right there, right? So that was the buyers. They defended, they did not let them take out that prior pivot low, and they popped them back up again on Monday. Gapped it back up. Okay, so anyone who got short on Friday here thinking, okay, it's just gonna make, it just needs 2 more cents to break below that low, and maybe it's gonna break down even further. Well, they got trapped on Monday, because here it gapped up and did not come back down to allow them to get out of their position gracefully. So maybe they got out, you know, somewhere in here, but it did not come down here if you got short down here. So a lot of short squeezing going on there. Then on here's your Tuesday, big outside bar, and it breaks down on Wednesday. So this looks a bit bearish. This day here, Tuesday, look, oh my, it looks like things are breaking back down again. But the reality is that, as I've said many times, the outside bars, the engulfing bars themselves, are not meaningful in one bar. You need more context. You need to see what's going on in the bar prior and the bar afterwards. So in this case, it goes outside bar down. That of course is bearish because it's momentum to the downside. The issue is that it opened down there, it gapped down, but they didn't keep it down. It immediately popped up. So as soon as it goes down and comes back into this range here, there's a good chance it comes back through the other side. So this bar right here is actually a continuation of this bar, meaning once it comes back through this range, there's a good chance that it's going to come through the other side to take out that pivot. Had the buyers had more time, then it's possible that they could have done it all in one day. But, you know, it didn't happen in one day. The next day, it gaps up and fills that gap. All right, so fills that. Here's that unfilled gap. Sorry, not the gap, but it takes out that pivot. Here's the unfilled gap that I identified a while back, 308, 301.08. We finally took it out on that Thursday. It looked really close that we're going to get it on Wednesday because it gapped up, right? It gapped up, came back down. But it happened on Thursday. 308, sorry, not Thursday. Look, on Thursday, it came really close again, 301.07. So within 1 penny, they couldn't do it. Then they gapped down on Friday just to buy it back in. So this is exactly what you want as a bull, because here it's showing you that there are buyers. Okay, so this is what, even though people are complaining about how choppy the trading is, this is showing you that the buyers are stepping up every single time. There's nothing much more you can ask for this from the bulls than this type of price action. Meaning, every time the market goes down, they're buying in the pocket. That's exactly what you want as if you're a long. You don't necessarily want. Yes, it's fun to trade markets that are pure momentum and things are blasting off, and people really want those markets where, you know, it's just blasting straight in one direction and you don't have any kind of pullbacks. But this is the next best thing if you're a bull, because it's so obvious that people are defending these levels. Right? Look. Every time they gap up and it comes back down, things look bad. They defend. Right here, it gaps down, they buy immediately. Here, right? They gap down, they buy it immediately back in. And this is kind of what you want to see, because every time that happens, guess what? You're trapping shorts. So anyone's getting short, they're probably so frustrated because every time it looks like things are turning around, it happens only for maybe half a session or 1 day, the buyers immediately buy it back and stick it to them. And now once again, we're very, very close to those all-time highs. So on the lower time frame chart, the 4-hour chart, and once again, I'm spending a lot of time up front here talking about the price action, but we'll definitely get rolling here, and we'll start going a little faster once we finish up our story with the SPY and the Qs. So for the SPY, here was the price action. This is what we talked about last weekend's video, if you recall. Inside bar down. Okay, so that looked kind of bearish because that was your Thursday, and went down on Friday, went inside bar. So here it looked did not look great for the buyers once again. But I said in last weekend's video, I said all it takes is if the buyers step up and take out that pivot high, immediately they're going after these pivots. That's what happened basically on Monday, Tuesday. Those are the pivots that they're gonna play right away, and that's exactly how it plays out, because the buyers they know what they need to do. They know that anyone who gets short in this sequence, they're gonna get stopped out as soon as they go through there and there and there. Right? So that's the price action. That's what you're kind of cutting back through again as you're buying that pullback. If you're buying these pullbacks, and as I said right in the beginning of the video, until proven otherwise, all pullbacks are buyable, right? So all pullbacks are buyable. If you're only getting that message now, it's a little bit late because it's nearly November and the year's nearly over. But maybe you need to hear that message earlier in the year that the buybacks or the pullbacks are buyable. But yeah, all pullbacks are buyable. I'll say it one last time. So once it broke back above there, inside bar reversal pops up, and we know how the rest of the week plays out. Here now, we need to watch out a little bit here, because now we have the mirror opposite happening on Friday versus last Friday. See, last Friday it went inside bar and down, and then it's closed inside bar. We have the opposite now. On Friday, it went inside bar up and then closed inside bar. So now, if they do an inside bar reversal to the downside, that means they take out the low of this bar here, and it comes back into the range again. You still have your monthly, quarterly open right there. So, you still have that level that the buyers may elect to defend, but that's what you need to be watching out for now, because you're blasting right in the highs, right? Like you hit that Bollinger Band, as we said before. You hit these Bollinger Bands, you need to start doing the Bollinger Band walk. Otherwise, you're going to pop back down, and you're going to have some corrective activity. And there's nothing wrong with corrective activity, right? That's a sign of a healthy market of buyers and sellers transacting. But I think a lot of buyers, they want to see FOMO markets where you have people just chasing price and it just goes parabolic. And that's not the kind of market it is. Just to give it one perspective one last time, is this is a 12-month chart, right? And you're up 20.67% in the year, right? The markets don't have to go parabolic for people to make a lot of money. It's these markets are great for people who simply want to buy, and they hold and they elect to buy pullbacks. So whether we end up at 20% of the year or 15% up in the year, for most investors, this is going to be a very, very good year. Okay, so back to our 4-hour chart. Again, just the warning sign is this, right? So watch out if this low gets taken out. If you're a short-term trader, this can pull back in and then put any kind of shorter-term trades at risk. Otherwise, if it pops up, it needs to keep going, because again, it's going to get into the Bollinger Band. Maybe it does that. Maybe it pops up, takes out the all-time high, pulls back in, does an outside bar back to the downside, some of that effect. That's what you need to watch out for, because once that low gets taken out, we'll come back in to retest some of these areas. Okay, so let's talk about Qs now. Very similar chart, just a little bit different, because the difference with the Qs is that we are not inside quarter. We broke above the last quarter's highs, and the last quarter's highs were the former all-time highs. So congrats, traders who hold Qs or investors who hold Qs. You got your all-time highs. So kudos to Qs holders. Now, monthly chart, outside inside. Okay, so that's pretty pretty bullish. That's an inside bar reversal, right? So inside bar, it broke to the downside. People got short down here for sure, because it went inside bar down. Okay, on the monthly chart, they got short, hoping that this is the top and it was going to come back through here again. Nope, that didn't happen, right? They bought it back pretty quickly. We've talked about it already in previous videos. You can go back on our YouTube channel and scroll through some of those, based upon the date that you want to examine. We went through all that price action. Outside, inside, outside. That's your reversal. As soon as it takes out the inside bar high, now the momentum's kicking in, right? And so we got one final trading week left. Where does this month end? Does it end above this previous month's range or inside it? Then you want to see how November kicks off, right? Does November kick off with a bar? We'll talk more about this next week. Inside here, or up here, or down here somewhere. Okay, and that will give us some higher probability trades or in terms of direction. Weekly chart, nice green week for the Qs, getting those all-time highs. There you go, up 2.06%. Okay, so now on the Qs chart, same thing on the 2-day chart. It was quite nice to see. So here on the 2-day chart for the Qs, outside, inside, breaks down, inside bar reversal, takes out that pivot high, and it takes out that one and gets to your all-time highs. That's how they did them, right? So outside bar, inside bar, a lot of consolidation there. The first 2 days, they broke it down. People got bearish. Tech looked pretty bad at certain points of the week, but they bought it right back, and boom, you got your all-time highs. Now, on the daily chart, right? This is how you can see it. There's your inside bar on Monday, very quiet day, fairly quiet day. Then things really fell apart for the bulls, tech bulls on Tuesday, as a lot of the SaaS names got really beaten up. Then they started to buy it back. See, they gapped down, just like the SPY chart. As soon as it pops back up, back into the outside bars range, there's a potential for it to go the other side, and that's what happens. So here, that's pure short covering now because it gaps up. If you stayed short down here, right, you did not cover your short. It's like, hey, that's an outside bar. I think it's gonna go down, and it comes up here, and you don't cover, or you're not lightening up a bit because it's very risky. As soon as it gets up here, there's a good chance it comes out the other side, and that's what it gave you on Friday. A good 0.8% day. Didn't happen on Thursday, but they finally took out that pivot there on Friday, and that pivot, and you got your all-time highs. So, in terms of the lower time frame price action, I really like the 4-hour time frame for just seeing, as I said before, right? Just seeing enough granularity where you're getting some of the shorter term swings, the intraday swings, without so you're getting that sensitivity of the intraday stuff, but you're not losing the higher time frames perspective. So here on the 4-hour, basically this tells you the story right here. It started right there, right? So here's your Monday. Right? It's so easy to some people, I think they get lost in the, as I said before, they get lost in all the noise. They get lost in the trees, and they lose sense of the forest. So using the 4-hour chart, basically you're only getting 2 bars a day, right? You're getting 2 bars a day, and so it just makes your trading a lot easier if you're struggling with the direction of the markets. Just if the 1-day chart is not enough for you, because you only get 5 bars in a week, and that's not giving you enough granularity, and you feel like, okay, I'm not in touch enough with the markets, what's happening intraday. The 4-hour chart, I find enough for most people where they can just see those 2 bars a day and not get overly emotional, because sometimes price is very, very luring, because if as guys like Jim Dalton say, price is an advertising mechanism. It's a mechanism for what? For opportunities. So the market does a really good job at luring traders in and doing things sometimes that is not in their best intentions. So with the 4-hour chart, it's slow enough where you're not going to get lured in, but fast enough where you're getting some of the sensitivity of the intraday moves. So here's the point. Here's your Monday, right? So pretty calm Monday. There's your Monday right there. And here's Tuesday where things kind of fell apart for tech. Outside bar down. There's the momentum condition that I talked about earlier in the video. Outside bar down. Here's your gap down on Wednesday. Okay, they bought it right back. Now, if you do not catch the bottom here, it's okay, right? Like, if you don't want to trade like the really lower time frame charts, it's okay not to catch that bottom. But here, you can see, as soon as this high gets taken out, you know that this is going to be the pivot they're going to go after. So the high there is 192.24. Look, 192.25. It got taken out right there. So this bar immediately says we took out that pivot high. The momentum has been extinguished. If you had any question about that, this bar told it to you. Now they're coming out the other side. Thursday, right? Friday, outside bar up. Here's the issue, just like we said on the Hughes and SPY chart. Got momentum in here now, so this thing has to keep going, and you're in the Bollinger Bands, right? So now it has to do the Bollinger Band walk. Otherwise, you're gonna have a little pullback, and then you're not gonna get that thing that's just gonna keep blasting straight into highs. Okay, so continue to watch for that. Russell has been pretty strong as of late. It's still the laggard. It's still the furthest away from all-time highs, but it's been holding its own. It hasn't been falling apart like it had been doing earlier in the year. So on the quarterly chart, still firmly inside quarter right now. So not yet close to those all-time highs right there, right? So inside quarter. Monthly chart. Okay, we had at the beginning of the month, it actually broke below the prior month's range, so we actually had a break to the downside. But now, looking like a hammer, right? So this is turning to a hammer right now on the IWM. So green month. All right, weekly chart, still going from that inside week break to the upside, right? So it broke the inside week here, inside week up and up, still going up, but tight trading. You can see how tight the range is here on Russell, right? Like that's it's doing a kind of a fancy broadening formation. You can kind of tell. So I'm gonna just fix my chart here a little bit, redraw this broadening formation, and it's doing something like that, right? So it's creating higher highs, right? So this high is higher than that high, and this low is lower than that low, and it's fooling everybody, right? Because just when you think it's going to break out, it comes back down, creates a lower low. This low is lower than that low, so now you think it's a downtrend, right? Or is it? Because it's keep making lower lows, but then all of a sudden pops back up again, and now it could possibly come back up through here again and trap any shorts you got down who are still short from down here. Okay, so on the 2-day chart, let's leave it at that. I'm not going to talk about the intraday stuff too much for the indices now, as we've already done that for the SPY and the Qs. 2-day chart, same thing. You know, we talked about on SPY and Q, outside bar and up. Need to watch that continuation. All right, so just continue to watch that continuation. That low gets taken out, the momentum will be extinguished. Okay, and on the just really quick intraday, look how nice that is. Thursday, outside inside, boom on Friday. It breaks above there and it takes out all these pivots. Okay, so that's a nice pop on Friday, 0.8%, and it closes the week with an inside bar. So how do we break this inside bar on Monday? Which direction? Okay, so Dow, let's bring that one up. Unfortunately, TradingView still hasn't fixed their bad data. So so I believe it was the 18th of October they had some bad data on their free charting data, and they haven't fixed it yet, so it kind of skews all the charts. So I'm not going to get into all the higher time frame stuff, but I'll show you the lower time frame 4-hour chart. Look, same pattern on Dow as we had on the Russell. Outside inside on Thursday, boom, big pop on Friday, 0.68, big pop out right there. Okay, so now what happens here? You're still far from the Bollinger Band, so what happens with this inside bar? You want to watch out for that. Okay, on to TSX now. TSX lagging a bit. We had hit some all-time highs on TSX, but the month of October, this hasn't been that it's been unkind, but it has pulled back. So down right now for the TSX. Let's just do this first because let's just keep the continuity. Quarterly chart, inside quarter right now, red quarter. Okay, just being objective. What is it? Inside quarter, red quarter, month, red month. Okay, so we're down about 1.53%. So red month so far. And we did break those 2 inside weeks. I was talking about that last week. How do we break this inside week condition, right? We had 2 inside weeks in a row below the monthly and quarterly open. So this is, the bias is to the downside. It did break to the downside this week, but it did not stay to the downside. So you can see here what happens when momentum dissipates. So on the daily chart here, okay, so there's your Monday, inside bar. Tuesday, outside, down on Wednesday. But they pop it back up, right? So right there, they pop back up. Momentum gets extinguished. Doesn't really go away on Thursday, but on Friday, it starts to come back up again. But the weekly acts as resistance. See that purple line? There's your weekly open. Hits there, cannot go much further. And it leaves us with a week that looks like that. A pretty tight week. Plus 0.17%. Not really going anywhere. So now, what you want to look for this coming week is the following. If the buyers can break back above this prior week's or this past week's high, then we get that inside bar reversal, and then we put these pivots in play. So how will that happen? Well, you have to break this inside bar up here, this outside bar's high up there. That is the high of the week. If this thing keeps going up, and I'll show you the 2-day chart, because that will give you a little more, that'll give you an idea of how that could happen. That would break the previous week's high. See the 2-day chart? Outside, inside. So if we break above this inside bar's high, you're immediately going to go after that pivot high. What was that pivot high? Yes, that was this week's high. So that will break this week's high, which will cause the inside bar reversal on the weekly to trigger. Okay, so that's what you want to be watching for on the TSX. EM now, emerging markets. Okay, so emerging markets, let's go back to our quarterly chart, start there. Inside quarter, but a nice quarter, up close to 4.5% so far. Quarter to date, trading in a green bar. Monthly, nice green month so far, up 4.48% for the month. Okay, and coming back up again. The weekly chart, another 3 consecutive weeks in a row. See, this really set the bottom for the emerging markets ETF. When that tariff talk, when that first phase agreement came out, it bottomed, right? So this thing bottomed, and ever since then, most of these ETFs the equities that trade inside this ETF have been doing decently. The big China names like BABA and those guys are not doing as quite as well, but the JDs of the world and IQs of the world, some of these guys definitely are doing trading better. BABA, Baidu, kind of no man's land still, but the buyers are defending their lows. So the EM markets going up. Okay. What else would I want to say about EM? It's let's talk about this. Basically, there's not much to say because it's just going up. All right, so right now the trend is up until proven otherwise. You can see that on the 2-day chart, just up, up, up. There's not much more to say other than that they're going to possibly go after that pivot here. They go after these pivots because they're obvious. Now, 4-hour chart, intraday traders here, inside, outside. See, so that's inside buy reversal because I know who got short down here on Friday. They immediately got run over. So it's an inside buy that broke the downside, but then they had to cover right away because that thing popped out 0.7%. So this thing is notorious for trapping traders with liquidity gaps. So you have to watch out when you trade EM because it can gap against you, and then they're gonna squeeze you. So that's what happened on Friday, and they closed near the highs. The second half of Friday was very quiet. Look how tight that is. I just want to show you what that looks like on let's say like a 15-minute chart. There, see that? That's your Friday session, doing nothing, just holding the gains. That's really tight trading. And guess what? If you're short from down here, you hate this, right? Because this is, you're just hoping that it's going to come back down so that you can get out gracefully or get out at a smaller loss. And they're just holding it for 3 hours, at a holding pattern, and you're not getting out. And now you're gonna have to carry over the weekend if you don't take that loss. So now it goes outside inside. How do we break on Monday? Okay, so that's the question. Which way do we break? Okay, let's talk about TLT now. Because TLT had another red week, and the momentum condition continues. So I've been talking about the momentum condition over and over again, but once you get to understand this and you can apply it on the higher time frame charts like I'm showing you today and in these videos, then you have the ability to actually apply them on lower time frame charts and make these lower time frame intraday decisions. But you can't do that until you're good at doing it on the higher time frames, which is why I do these things every week, so you get the idea. So outside bar up, inside on the monthly. On the quarterly, still inside quarter. Okay, so yes, EM has been looking not so hot, down 3%. So yields have certainly been coming back down again. Back up again as the price is coming back down, but still inside quarter. Really not giving you a lot right there. It's going to be hard for it not to be an inside quarter. Frankly, we'll see what happens. So monthly chart, as I think I showed that already. 2 inside months so far. So with 1 week left, do we have enough selling momentum for this thing to break that prior inside bar low? If it does, that is significant, right? Because here, outside bar up, this is a momentum condition. If this low gets taken out, because this is an inside bar, there goes your momentum to the upside on the bonds. So watch for that. You're watching the previous month's low. Good condition there. Now here is what happened on the weekly, and this is what we're watching for. Outside bar down. As I said this last week, this low here, well, not last week, but this low here, or this high here, this new low last week, if that high was going to get broken, then there's a chance for things to come back up again. But right now, momentum is still to the downside, still negative for bonds. Okay, so on the daily chart, let's take a look at it there. Yep, so basically it went, here's your Monday, so it went outside, inside, it gaps down. But they buy it back. So as soon as it breaks back above that high on Tuesday, inside buy reversal, because this high took out that high. See, so 140.23, 140.31. And not quite enough to take out that one though, 140.38. But then they sold it off again. So, these are very tight moves still. So it's not like the bond moves we saw here. It's just slowly bleeding now. So for TLT, just watching the 4 hour, which way is it break on Monday? Right, we have an inside bar there. Expect this thing to go down further. But the range is so tight right now that there's a lot better stuff to be trading excuse me, than TLT. So the point is this, right? So even though price is universal, and once you understand price, you can read any chart, there's still the understanding that you don't want to trade any chart, right? So that's the distinction there, is that just because you can understand every chart, it doesn't mean you want to trade every chart. A lot of trading has to do with understanding your edge and what your edge looks like, and that's going to depend on you and what time frame you can trade at, and what level of comfort you have with your methodology and so forth. But about applying price, especially the way that I see price, I want to be getting involved in instruments that are moving. And when you have a condition where it's like inside month and the ranges are very, very tight like this, for me, I like not to trade TLT. Not saying that it couldn't move and break some of these ranges, but when you compare TLT to something like a Bitcoin or some of these other equity names that are really moving right now with volatility, yeah, there's no reason to tie up your capital trading TLT right now. That's just my personal opinion, and that's just based upon how I want to apply my edge. Okay, so on to the next one. Let's go GLD now, because is slowly coming back up again. So GLD, just a bigger time frame picture. Momentum up on the quarterly chart, right? So outside bar up and up. Or inside, excuse me. So inside quarter so far, to be objective. Okay, green month. Once again, on the 3-month chart, excuse me, we're just waiting for that low to get taken out. If it gets taken out, that means we know on the quarterly chart, momentum has been extinguished. Right now, the bias is still to the upside on that quarterly chart. Okay, green month, decent month so far, up 2.15%. On the week, we finally broke that double inside bar condition to the upside. Okay, it's still very tight stuff though. This is very tight, trading. It's not breaking out yet like we had before earlier in the year. So inside breaks the upside. Expect more from gold here in the next week, because it's kind of been that way where the breakout weeks kind of muted, then the following weeks things really get going. So let's see what happens with GLD this coming week. But it kind of happened here on Monday with GLD. Here it's an outside inside pattern. Okay, so you had your outside bar on Monday, and looks like gold's going back down again, but outside inside on Tuesday, and boom, they gap up on Wednesday, short squeeze them. Okay, and the rest of the week is just a shot up here. Now Friday it did gap up, but it did come back and give back some of its gains. But again, I think it's just people profit taking here, and we'll have to wait and see now. Maybe we'll pull back a bit, fill that gap. Actually, it did fill the gap already. Maybe fill that gap down here. But at this point here, we're still above that monthly quarterly open right there. Okay, so on GLD, that's what you're waiting to see here on the 4-hour chart. How do you resolve that outside inside? I think it resolves to the downside, just because if it goes into the upside here, it can pop up, but you're inside this Bollinger Band now. So realistically, even if you do an outside inside up and you're this high up in the Bollinger Band, it'll probably fail and it'll come back down again to fill this unfilled gap. Okay, but let the price lead. Let's talk about silver, because silver also had some nice setups, and I talked about it last week. SLV setting up, and we had that pop this week. So silver inside month still. Okay, so inside month, 1 week left. It could just end up as an inside month and set up something even better next month. Okay, here on the weekly, this is what we're looking for, to see if they could break out above the prior week's high, because that's kind of like a shooting star. That's kind of like a hammer, and then to break above there, that would put this pivot in play. Ultimately, putting that pivot in play. Okay, that's the pivot you really want to go after there. 1751, and it started off at SLV here, pretty straightforward. Actually, I'll do it on the daily chart. So it's actually a really nice setup, and I'll just spend a little bit of time talking you through this, because it's actually quite a nice setup that I think people can add to the trading playbooks, or at least an understanding of price. Okay, so here I've identified it already. The prior week's high is here. Okay, there's your high of that. Why is this significant? Because if you break above that high, people are gonna have to cover. Anyone on the weekly chart, if you went short here in the prior week, you're gonna put your stop there. If you don't put your stop there, you're gonna put your stop there, right? We just know that. Okay, that's the objective truth in terms of how people trade. They put their stops above prior bars highs, so we know that there's gonna be liquidity there. So now, how to get into that trade? I'm not gonna talk intraday. I'm just gonna give you a daily example here. So here on Monday, it actually gapped up, right? So here's your Monday. It gaps up and actually breaks above the week's high. Okay, it goes to 1668. The high here is 1668. So right there, it hits that pivot high, and anyone who put their stop too tight, not one tick above or not 2 ticks above, or right there at that bar, they got stopped out. Now this here's the problem with breakout traders. They do the same thing. Okay, so these breakout traders, they put their buy entry, their buy order, right at this area here, the prior week's high, or 1 or 2 ticks above. So they get long right here on the breakout. Okay, so if you're a breakout trader, you know what I'm talking about. You're trying to buy breakouts, and you buy that breakout above that high. What usually happens? The breakouts fail, right? So it works for you, 13 cents. It goes to 1668, like we said already, and then it pulls back. It goes all the way back down again, and then even more so on Tuesday. And if you got long here, you probably if you're too tight, you stop yourself out, right? And then you miss the rest of the week. This is why buying breakouts and buying that kind of momentum situation fails most of the time. It frustrates most traders who are taught those types of methods. It's a really painful way to trade, a really difficult way to trade, and I always discourage people from taking trades like that. So here's a way better entry, okay, and this comes from better understanding. Pullback, okay, so simple corrective action. Wait for the corrective action. So it breaks the week to the upside. Now you're waiting for a pullback, right? Because you're waiting for the initial guys, the break guys, to get stopped out, right there. The pullback, here's the pullback, they get stopped out. So if you buy this breakout, maybe you put your stop down here, the next day you get stopped out, and you're thinking, man, I'm not buying that breakout again. It's going to fail again. Well, guess what? This is the buy signal right there. This bar's high, Tuesday's high. Because this is the logic, okay? If this trade works, they will go after this pivot and then that pivot. And guess what? By going after this, so if this trade works, this thing breaks above this pivot's high, the next pivot is that pivot. And if this pivot works, it's going to take price back above the prior week's high, getting us back into the condition we originally wanted in the first place. And that triggers here on Wednesday. Okay, so here you're buying corrective activity, not chasing highs. You're stopping people out first and then looking to get in. So here on Wednesday, you get into the long. And yes, it was a hard trade to hold because you were not a winner going to Wednesday at the close. You get filled here at 1646 and it closes at 1639. Okay, but it works in your favor, right there. The next bar immediately takes out that pivot, right? So there, 1668 high, 1669, right? So 1 penny. Anyone stop shorts who put their stop right there got stopped out. And then we know what happened on Friday. We had a big gap up, plus 1.5%, something to that effect, and that's the way the trade was supposed to work. And you got way better. You got a way better fill down here. It took way less heat than some guy who bought up here had to hold through this stuff just to get that. This is timing it. This is timing the market. This is just trying. You're hoping that price goes in your favor. Okay. So hope that small price action lesson helps. Let's talk about digital gold now, BTC USD. And let's bring up the Bitfinex chart. And boy, oh boy, did Bitcoin ever have, and the crypto market ever had a wild end to the week. So just to be give you the higher time frame picture once again. Inside, quarter, and down. That's what happened this quarter here, this month. It went inside, quarter, and down. They popped back up though, and now it's a green quarter again, trading back above the quarterly open. Monthly chart, it's going to be a bar has a lower low, so lower than the prior bar's low, but green, back above that that quarterly open. Okay, green month. Week, so it gets interesting, and I'll talk about the trades in a few moments here. But if you recall from last 1 or 2 weeks now, I've been trying to get short on Bitcoin. We did that, and that was a very nice breakdown, and I'll show you that trade in a few moments. But I actually went long again, and I'll get to that trade maybe after I show you the short, what happens on the lower time frames. So here on the daily, let's tell that picture. So in the daily picture here, going into this week, I was very, very bearish. If you recall last week I got short because we were trading below the monthly and quarterly open, and we had this situation. Outside bar up, momentum up here now. What do we know about momentum? As soon as that low gets taken out, right there, momentum gets extinguished. So I get into that trade on the 12-hour chart right here. Outside, inside, and this time ends up being an outside bar down, which we know if it goes outside inside, it's going to take out that pivot, and that triggers the daily chart, right? So that will trigger the outside and up and back down condition right there at 81.81. I actually get filled at 82 something, so my low here 8205.4. so very nice trade. That ended up going close to, I think, close to 7R. Yeah, this thing ended up going here plus 8R, close to plus 8R. That's at one point. And then on Thursday we get an inside day. So let's go back to the daily chart now. And this is when you have to watch out, because you have an inside day and it's hitting the bottom of this Browning formation, right? So it's hitting down here. I covered some down here, did not cover enough. I wish I covered more. That's just the way it is. But I was very, I didn't, move the rest to break even once I took my profits down here. And then you can see how far you are below the Bollinger Bands. And this is why, I do believe in that Bollinger Band walk. So once you get down here, if you don't stay down, it's gonna pop back up again, and it popped right back up through the Browning formation, right? So that big move we all heard about in the news, that was a plus 16% day, and there is another plus 16%, plus 15% move on Friday. So Saturday. So very big moves for Bitcoin. Okay. So I covered my shorts and actually got long in on a really simple trade. I'll bring it back up here on the weekly chart. Inside bar reversal on the weekly chart. So very simple. Once price broke back above the inside bar high, I'm getting back long because that's an inside bar reversal, right? So very tight stop, inside bar low. Wasn't expecting this thing to work out as fast as it did, but you can see how fast it worked, right? So just from the high to the low there, this thing popped up to, what is it, 10,480. I thought this pivot was going to get taken out, 10,487. Is that right? 10,480. 1047. Let me just take a look here. I thought I was going to be, I'm just going to double check something. Oh yeah, that pivot high there, 10,487. 10,480, yes. I was thinking 10,487 could get taken out. It ended up being this pivot here, 480. 487, 480, yeah, 487. Okay, so it wasn't quite enough to take up 487. So, still long. Took a lot. I took a lot of it off already, because once we got, once again, high up into the Bollinger Bands. I'll just bring up like a 12-hour chart. You can see it here. The 12-hour chart is once you get up here, it doesn't really know where to run. Like it's going. This is called FOMO trading. Or Momo trading, whichever you want to call it, but I think it's FOMO trading because traders are they're afraid they're missing out, and so I covered a good portion around this area here, and I also covered some at 10,000 in here because that was a nice round number. And I thought it was going to get up to 10,487 up here. Came really close, came within $7, but did not. It came back in, so I took some more off at 95 area here, and how I'm holding a bit now for break even. My break even's at 84.39.7. All right, so that's the story on Bitcoin. Now, not much different when it comes to another name, Ethereum. Ethereum was also quite bearish on, so let's bring up that. So Ethereum now. Okay. Here, still inside quarter for Ethereum. Still trading slightly red. So inside quarter, inside quarter. Monthly chart, inside month. Okay, that's being objective. That's what it is. Inside month right now. Even with all those price swings, it's still trading inside last month's range, last quarter's range. So actually quite tight trading. And on the weekly chart, you have the outside bar now. So here's the issue though with Bitcoin and Ethereum and a lot of cryptos is you have a lot of outside bars. So the question is, what's your next bar, right? Are you going to get an outside bar up condition, inside bar, or down bar? And we know that if it breaks either side of this range, it has to keep going. Otherwise, if it doesn't, you're going to run out of momentum. It's going to pop back up or pop back down again, depending which direction we're talking about. Or does it consolidate? Because if it opens right here in the middle, right, it's going to consolidate and you're going to get an inside week. So you're going to get an outside inside, and that potentially means we have nothing going on next week. And then going into November, maybe that kicks things off with a bang again because we have a new trading month and a new trading week and a new trading month. Okay, so on the daily chart, nice stuff going on there. So here you can just see the momentum condition. Outside bar down, 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 pops back up. Sorry, that's a weekly chart. I'll bring up the daily. Here, outside bar up, exact same trade, right? Outside bar up, breaks below here, triggers that chart back to the downside, inside bar, and then it pops up again. So here we have an inside bar now on Saturday. Let's see how they break it this coming week. So those are the major instruments that we're going to cover. I'm just going to flip through a few at a really quick pace here now to show you some things that are interesting for the week. So a few names: TIGR, so Tiger, outside, inside on the weekly chart. Very much a bear slant here. Let's see if it breaks to the downside. So on TIGR, NBEV, marijuana name, outside, inside on the weekly chart. We had a really big week 2 weeks ago. So which way does it break now? Outside, inside. MDB, MongoDB, got really beat up for the past few weeks. Finally setting up an outside, inside right on that monthly and quarterly open. They're buying back tech stocks. This could be a very interesting one to watch. It is a bit spready though, so watch out for MongoDB. Okay, Docu, another tech name that got really beaten up. Possibly one to buy back into here. Look at that, we're going back in the highs again. Okay, so outside, inside, this breaks above there. It's gonna, you're back above the monthly, quarterly open. That could be a good one. Cron, another marijuana name. Maybe this thing's finally bottomed, right? So outside, inside, maybe they pop back up right at that quarterly open, monthly open. That's what makes it significant. You want to watch that, because if it breaks back down below here again, right, we're going back down. We're going further down. But so you can see here, this is the form area that was there was a bunch of resistance down here that became support. Okay, now let's just flip through a few other names. If you recall, last week I started sharing some names that are on my my top 10 best, top 10 worst list. So I'll flip through some of the best names on my list here now, and this is based upon not on, like, as I mentioned last week, not on the percentage returns year to date or month to date or quarter to date, but more on their Sharpe ratio. So how smoothly are these things moving? What's the trend look like? How efficient are these stocks at going up or down? Let's start with the top 10 first on the let's do like top 5 on the buy side. Lennar just powering up to the upside. Let's look at a daily chart. You can see the trend of Lennar up. Okay, MPC, look at this oil name. Okay, Marathon Petroleum up, yearly highs. Okay, we get close to yearly highs, very close to yearly highs. Okay, Home Builders, another great home builder. Okay, Pulte Homes, look at the trend on that guy. Okay, are the pullbacks buyable on Pulte? Yes, they've been buyable all year. TSM, Taiwan Semiconductor, another beautiful chart on that one. Nice trending chart. Celgene acting very strong, going right in highs. Utilities, NEE, doing strong. People are still looking for yield. And another one that popped up recently on my list, good old Apple. I'll do 2 more. Apple, look at Apple now, right? All-time highs. Okay, Apple all-time highs, very smooth trend now. And then let's do one last one, Valero. Very nice trend there, going right, into yearly highs. Okay, so Valero. Now on the worst list, what's trending to the downside? Okay, on Valero we got, or on the downside we got one of the worst ones. Beginning off is Vonage. Vonage in a pretty steep downtrend now. Quite efficient at going down. Beyond Meat, still no bottom there. Okay, Beyond Meat, no longer the Wall Street darling anymore that it was when it was back, at 239. Not trading at 181. Filled that gap all the way down here, right? Expect more. Got earnings right there though on the 29th. Mobileye, so this one here, trend is beginning to the downside. So Mobileye looking weak. I actually had been long this thing for a time, but I did get myself out of this trade because it stopped working. So Mobileye to the downside now. Overstock, no bottom yet in Overstock. This thing is getting close to these prior lows here, and right now the trend is still quite strong to the downside. And let's do 2 more. NVTA, okay, NVIDIA, strong trend to the downside. And one final one, Zoom, another former IPO darling, no longer a darling any longer. So look, there's your IPO low right there of 59.94. Man, came close. 60.97, right? Low there, 60.97. So came very close. and Zoom now. Zoom video looking like you can break below the IPO lows. All right, well, as always, I hope you enjoyed this week's video. If you have any questions, feel free to drop them in the chat or the comment section on the YouTube channel or on the blog. And if you enjoy the videos, please make sure you give us a big thumbs up. Hit the subscribe button if you want to get these videos delivered to your inbox. And as always, if you find them useful, please share it with your friends and colleagues so we can grow the community. And as always, I wish you a great trading week and happy trading. All the best.